All right. Good evening, everyone, again. Hope you guys are good. So, today we are going to talk about how to identify a good investment opportunity. As the title says, my name is Dr. Hossein Yusuff. I'm a chartered accountant and a certified financial advisor. Today, I'll just talk about what we should look out for when we have investment opportunities. So, what are the things to look out for? What are the things that make an investment opportunity a good investment opportunity? And that's what we'll be talking about today. So, as I present, please, if you have any questions, just let me know. You can raise your hand or you don't put it in the chat box because I won't be able to see, but you can raise your hand. I think I'll get that notification and then we can answer your question. Or if you want to if you want to delay till when I'm done, I'll still take questions as well. So feel free to ask your questions anytime. All right. So let's start with investment. What's an investment opportunity? What makes a good investment opportunity? Well, investment opportunity. So, first of all, for it to be an investment, it needs to have a growth potential. What does that mean? It means that if it does not have a return, if it's not returning anything, or if it's not growing, it's not an investment. The difference between an investment and an expense is that an investment will give you returns. An expense is just an expense. You've spent the money on this thing, probably for some value, but you are not waiting to get a return on it. That's the difference. What I'll do is I'll quickly, I think some people are joining in. So what I'll do is I'll quickly have someone else as the, I'll have someone else as the host so that when people join in, it won't. Okay, let me just go on. All right. So where were we? So the difference between investment and an expense is just the return part. So if it does not have, if it's not going to give you a return, it's definitely an expense. An expense could be just you pay for something to get value, but the difference is that you are not expecting any returns in the future. So what makes a good investment? The first one, like I said, it needs to have growth potential. It needs to grow, right? Uh, Another one is, does it have a risk reward balance? So every investment would have a risk, would have a risk factor in it. So when you look at the risk and you look at the reward you stand to gain, uh, does it have a balance? Is the risk too much than the is way too high compared to the reward? So these are the things we need to look out for to ensure that it's a good investment. Sometimes they say, oh well, the return for this investment might be 20%, but it's the probability of you getting the 20% is 50-50. So when you look at it, you say, well, for just 20%, I think I'm taking a little bit more risk than I should for just 20%. So there's an imbalance between the risk you are taking and the reward, right? Another one you need to look out for is, okay, can I exit this investment quickly? So there are a lot of investments that um, when you put your money in it, you might not be able to take your money out for a couple of years. So you for this one, you really have to look at your own personal investment goal. Am I investing long term at the moment, or I'm looking to I'm looking for a short term investment? So if you can't take out your money quickly, if there's no liquidity in it, and your goal is short to medium, it means that it's not a good investment for you, right? And that takes us to the match your goals. So your goals could be, okay, let me just quickly invest this money for 5 years so that I can use it to do this and that. But you're putting your money into something that might not yield in the next 10 years. Maybe you're starting a venture, you're starting a company, or you're investing in something that maybe real estate that you know that might take a while to get your money back. It does not match your goal, so it's not really a good investment for you. And the last one is the legality of it. So is it transparent? Is it properly vetted? Is you don't want to invest in a complex investment that you don't really even get what they are doing there, or they are not transparent about what they are doing. So, and a lot of these Ponzi schemes are like that. So you don't really know exactly how the money is earned. You just know that you're getting 50% or you're getting this amount when you put your money in. So that might not really look like a good investment. So these are the things to watch out for when you are thinking of an investment. But before you even go into an investment at all, we need to first of all do an assessment of ourselves. So we need to know exactly what we want out of the investment. So the first thing you need to check is my slides and all. I hope my slides are moving though. 1 second. The slide has decided not to move again. Okay. Right. So the first thing you need to do, like I said, is an assessment of yourself, right? So what type of risk am I willing to take? Am I willing to take high risk for higher rewards? Am I like, you know what? I'm not really earning a lot of money, so I don't want to put this amount that I've saved for many years. I don't want to put it in a very high risk investment. So you know what? I'm going to look for low risk investment. So you need to understand your risk tolerance, and you need to make an assessment of your risk tolerance. Okay, and how do you do this? You can do it by your age or by your financial capability. So people that are older tend to take less risk, and that's because you are at that age where funds are limited, so you don't want to put money in something um, that you might lose all your funds in, right? So you want to make sure that you have as low risk as possible, right? So that's why people that are older tend to take less risk. People that are younger tend to take more risk, and that's why a lot of young people go into crypto, this high volatility investment asset classes. So they tend to have the ability to still go for high risk, because if you lose everything when you're still 20, there's still a chance that you could probably get it back. We are not talking about an older man that is 60 and is just thinking about retirement in the next maybe 5 years or 7 years. So you have less time to get all your money back at that point. But when you're younger, I mean, most of my clients, I usually recommend that they go for, if not medium, if sorry, they if not medium, they try as much as possible not to go for too low risk, because your investment portfolio won't grow as much compared to when you are now getting older. So when you're getting older, you can be conservative and be like, okay, let's take it easy. This money that I have, I want to make sure that it's secure, but I still want it to grow, right? Welcome, Opeyemi, for joining us. I think you missed the bits, but I'm sure you'll catch up anyway. We've just gone through what makes a good investment. Why is it not? I think I'll leave it this way because let me leave it this way because it's not letting me navigate well. Okay, so I said Opeyemi has just missed this part. So we were talking about the difference between investment and expense, and we talked about the fact that the main difference is because for any investment, we expect it to grow. We expect a reward or a return in the future. But for expense, we don't. It's just something we've spent money on, probably for a value or something like that. So we discussed how to know if it's a good investment, and we mentioned a couple of things to look out for, right? Which includes if it matches your goal, what is the risk and reward balance? Can you easily just take your money out? Um, there was a client that he wanted to invest in something, and in a company actually. So I told him, you know what? I think personally the best thing to do is start with a lower amount. They really wanted to invest in it, so I said start with a lower amount, and after they said every year, he gets his reward, his return, and he can definitely get his money back. So I said start with a lower amount. After the first year, try to take all your money out to check the liquidity of it. Try to take all your money out. If you are able to easily take your money out, then it has passed the liquidity test. That, okay, I think this makes sense. But anytime you invest in something and after the first year they are telling you, and brokers do this a lot, where when you want to take your money out, they say, oh, you know what? There's another good opportunity. Honestly, if you invest in this opportunity, trust me, you will 10x your investment that you have with us right now. So and then they say, you know what? Okay, let me listen to that idea. And every year they do this for them. Like it's something that happens a lot in the industry. So they, even though they tell you you can easily take your funds out, you need to try it out and let it pass that test. That okay, I've been able to take my money out, and that's what we do at the Daytopia Investment Fund as well. The club that we have, the investment club. Um, anybody that wants to take their money out, they easily take their money out. So it is a very important part, that liquidity part. If not, it means that probably your money um is not as liquid as you think, or maybe there's no even investment at all. So that's what we discussed before, and then you make sure that it's transparent and properly vetted. So we're talking about, before you even go into an investment, there are a couple of things you need to um, assess for yourself. And the first thing is, let me see what is my risk tolerance. How much risk am I willing to take? What are my financial goals? So you need to align that investment with your financial goals. If it's long term or short term, do I want to invest for 5 years or 2 years or 10 years? You need to make sure that any investment you make aligns with your financial goals. Another one is your faith and your ethical value. So, for instance, there are some Muslims that do not want to invest in anything that is not Sharia compliant. So, and that's why we have Sharia compliant investments. Sharia compliant investments are just investments that follow Sharia rules. Sharia rules says that we shouldn't invest in things that affect the society in a negative way. So guns, alcohol, all those things, gambling and stuff, those things are not Sharia compliant. So people that stick with Sharia compliant investing do not like to invest in things like that. So you need to know also that, okay, I don't want to invest in things like this. And it's not just Sharia, guys. We still have other people that just believe that, you know what, I only want to invest in things that help the society. So it doesn't have to be like Sharia compliant. I also want to help people that Ugo wanted to join, but I think she left. I also want to help people that also want to help companies that support people or do things that benefit the society. And that's what we call ESG investing. So uh, investing that helps the society basically. So people like that. they select their investment based on that value, right? So that's what you need to. So that's why I said before you do any investment, you need to do an internal assessment, like your own fundamental assessment. And let me see the things that I really want to invest in, and that is when you can decide which one is a good investment. So, like I said, everyone will have different investment that are either good for them or not, but it is based on your own assessment, right? Also, another one is how much research time you are willing to invest. There are some investment that, yeah, there are some investment that you have to get that education before you have to get that education before you understand it. Like if you are going into crypto, for instance, yeah, and you don't have a clue of what crypto is, you're just hearing a lot of words being thrown around, and you're like, what is this one again? So, you want to make sure that, okay, do I have time to research for these things? If you don't have time, it means you need to stick to things that you already know. But if you do have research time, then it means that you are just able to expand beyond, what you know, and you can invest in things that you don't know because you know that you can go on to invest in it. You can go on to, sorry, invest time in your research about it. So that's just what it is. I think there's a question. Let me see. So what is Okwemi is asking the difference between ESG investing and impact investing. ESG investing, well, impact investing is like an encompassing word, impact investing for ESG investing, Sharia compliant, and also impact investing is just okay, things that impact the society positively. So kind of like mission driven. So they have a purpose why they are investing and things like that. So it's general, right? For instance, impact investing could be like investing in solar energy for Africa, for some of the African countries, things like that. So, but ESG is like environmental, social, and governance investing, where um, you just focus on those areas. So, like carbon footprint, and stuff like that. ESG generally, so environmental, invest in things that help the environment, and governance and all that. So impact is like the umbrella that covers, those kind of investing. So anything that has good impact, basically, um, is under impact investing, which includes ESG. Did I answer the question? Okay. So in other words, yeah. So impact is like having an impact, but ESG is also having an impact, but it's more like ethical. You're trying to be as ethical as possible. Okay, so the last one is, and this one is also similar to the research time. What type of investment asset classes are you very familiar with, and which ones do you need more education on? So what I usually say is start with investment that you understand a lot. Some people are in the real estate business, or they have a couple of real estate investments. So it's easy for them to say, okay, let me invest in real estate because they know how the system works. They understand it. They've learned about it. They understand it. Some people, they want to invest in stocks and shares, but they understand it to some extent, right? So you want to invest in things that you are quite familiar with. Uh, you don't want to invest in things that you have no idea about. It's very confusing to you. You are just putting money in it. Yeah, it won't work that way because you can't really assess, if they are doing well or not, right? So you need to ensure that you start with the asset class that you're familiar with. Okay. And And how do you evaluate an investment opportunity? So, two key things you need to evaluate. The first one is due diligence, and the second one is your personal interest. And like I said before, um, when you get an investment opportunity, the first thing you need to do is, okay, let me see if it is legit, if it's not a scam, right? And then when it clears, it ticks all the boxes for that, okay, this is a legit business. Now we need to see how it aligns with our own personal interest. And so the first one for due diligence is, what is their income stream like? What is the business model? You go into the fundamental analysis as well. You check for the management team. You check for their past track record, their past financial records. You check all that, and if it ticks all those boxes, that okay, they've been doing well, making profits, low liability, it ticks all those boxes. And then you go into legality as well. You check for their compliance with the laws. It ticks all those boxes. You've also checked for, you've checked SEC, or if it's Nigeria, CAC, you've checked everything. It ticks. You've Googled the founders and you see that, okay, yeah, that's what they're actually doing. Now it has passed the due diligence test. Now we need to say, okay, does this even align with my own personal interest? For instance, I want something that will generate returns for me in the next 5 years, not 20 years, right? So I'm checking it and I'm saying, okay, they pay a dividend of this amount every quarter. Okay, that looks like it's nice. It looks like it matches with my personal goal, right? Okay, I only want to do, let's say I want to do uh, ESG, or I want to do Sharia compliance investing. So let me see if it matches with that, and you check, and you see that okay, they don't invest in things that you don't align with, your values do not align with that ticks the box as well. And then you want to see that, okay, I know they are making profit, I know everything checks for me, but are they really solving a real problem? And the reason why I put this is because a lot of times, and we've seen this a lot. A lot of times, companies come in, they make a lot of profit, they make a lot of money, they make a lot of buzz. People are saying, invest in this, invest in that, but all of a sudden, they just phase out for some reason. And why? The reason might be because the company is not really solving a real problem. So, if it's not really solving a real problem, they might not be here for long. And and this applies to companies that are new. Maybe you want to invest in a startup. I get a lot of investment opportunities from friends, or even from different people that say, you know what, I want to start something. I think we should go in together. I'm thinking of this idea and this. And one of the questions I ask myself is, okay, that's a good idea, but let me see, is that problem a really important problem, a real problem that people really pay a lot for long term? So, for instance, you might want to start um, a business on, let me see, a business on something that, why idea come on? Maybe a new phone, but you want it to be cheaper. So it's a good idea. You want it to be cheaper because generally Nigeria, 50% are unemployed. People want cheaper things in Nigeria, but is it really, or maybe let me say clothing brand. Let's put that clothing brand. You want it to be a brand, a good brand in Nigeria, but it's a cheaper one, a cheaper version of your Louis Vuitton and this thing. So I know it's a real problem, right? It's it's something that, okay, well, people will want to, if it's really, the quality is really good, people want to buy, but how long will people want to buy it for? And that's a big question, because Nigerians like things that, you know sh- people attach like high value to. People want to, a lot of Nigerians, they want to be associated with all this Louis Vuitton actually, and all this Gucci. So is it really a real problem? And it's a big question. So that's why you need to ask that question. It's very important. So Opeyemi, were you raising your hand?
Yes, sir, I was. I wanted to ask a question.
Yeah, go on.
Yeah, I want to ask, how do you differentiate like an expensive investment from the one that is overvalued? If
Mm,
there's anything like that.
yes. Okay, that's a good question. So, let me say you want to invest in stocks, for instance. Now you are looking at the share price. You're saying, okay, this looks like maybe 50 pounds, for instance, 50, 50, 50, yeah, let me put pounds, 50 pounds. That looks good. But what you now need to do is, okay, let me compare uh, this amount to their the similar companies within the sector. Let me compare the similar companies within the sector and then compare the profitability of these companies together, right? So in this way, when you compare those, so any investment you need to do, you need to still compare with the benchmark, right? So let me see if I compare this with this, does it look like a more expensive investment or not? It's easy to get for stocks because you can definitely check their PE ratio, which is the price to earnings ratio. But if it's an investment like a friend is coming to you with a startup and they're just saying you should invest in this, what you need to do at that point is, okay, let's go through the books and let's see what is the um what is the estimated return that I'm going to get from this, right? Let's say it wants you to invest 2 million and it says, well, you are going to get 10% of it uh, after a year or so. So what you need to do is, okay, 2 million and I'm going to get 10%. That means it will take me how many years to get my money back, right? So if it takes longer than you would expect, to get your money back, 10% now it means it will take 10 years to get your money back, right? So that looks like a long term, and that looks like an expensive investment because you are getting it in 10 years. So it's kind of called payback ratio. So it looks like it's way too far for me to invest 10 years of my life for just 20 for to get my money back before I now start making profits, right? So that looks like a very expensive investment. So you have to make sure that like I said, you need to first of all get your own. You need to assess yourself. How long are you willing to wait for before you get that investment, and what is the risk to reward balance? So if the risk is looking like, okay, this is a new business, we are not even sure if we're going to make money, and I'm putting this amount in it, I don't think it's a good investment for me because the amount is too much, and it's the risk is too high, right? So these are the things we need to review. So that's why I said, if you see one investment, for instance, it might be good to someone else, but to you, it might not be good because it does not match with your own goals, right? So we are going to go to red flags because of what just recently happened with the Ponzi schemes. What are the red flags to look out for? The first one is any investment that promises, unrealistic returns. That, okay, you're going to get 100% of your money back within a week or a month. That looks unrealistic. So you need to do further due diligence. Okay, let's actually see, how are you planning to do it? What are you going to invest the money in before you give me that amount? So that's the first one. The second one is, I think I discussed this before. There's no clear exit strategy. Okay, how do I even say I'm not doing again? So investments that lock your money for a long term um, without an exit strategy. So for instance, there are fixed there are fixed income investment that say, okay, for 7 years, this is the amount we are going to be giving you. They are not unrealistic. For instance, the new sukuks that came out. It's kind of like a Sharia compliant investment that the federal government just brought out. They are offering 19 point something percent return every year, which is paid quarterly, but for 7 years. But it will take 7 years before you get your money back. That so 19.7%. What you need to do is okay. Let me compare it with other fixed investment returns, and that looks like within is realistic because most fixed assets they give returns around that amount as well. Sometimes it's like 12%, sometimes, but because it's longer, obviously 7 years, we expect it to be a lot higher, which 19% looks realistic. Aside from that, it's a government-backed investment, so usually they pay back. So these are the things we need to ensure that we look into, before we say, okay, it's a good investment or not. Another one, which is a main one that they use, is they try to put you under pressure to quickly go into the investment. So anytime they are putting pressure on you that, you know what, if you don't do it today, you might never be able to do it. If you don't put the 10 million right now, you might never have this opportunity again. While sometimes it is um they are saying the truth that probably because a lot of investors have inquired about that investment, and they want you to get in, but most of the time it's usually a tactic to get you not to think too much about it because they know that human beings normally, if we think about things, a lot of the decisions we make, if it's not rational, if we have time to think about the decisions we make, we most times make the right decisions. We have the time to like solicit for advice, talk to people, and then probably we'll get someone to talk us out of it. But if they put pressure on you, you just say, you know what? Let me just quickly send the money, and then they can start it. A popular celebrity, what's his name? Chinko. It was I listened to his interview. I think it was last week. He was talking about the investment he made that really made his career go really um, that made his career go down. I guess he said that investment changed his life for the worse because he put all his savings in it, and he said uh, what happened was that he went to they even they had an office, so he went to to the office. They told him, okay, we lock your money for 365 days. We invest in it because we have some traders, so they do day trading, and we give you 20% of your money every month. It was like, this looks so too good to be true. So he went to the office to confirm that okay, they have a legit office. See employees there. And he had a conversation with the founder, and the founder was like, no, see the traders here, we do this every time. We have a lot of people that do this. Just put your money or your savings in it, will be. But when he came to the office, they just kept on telling him that, see, if you leave this office today, you might not be able to get that opportunity anymore. And that's the fact. You need to do it today. So it was like, you know what? Everything looks real. Yeah, he saw the traders, he saw the employees. People were looking busy in the office. So it was like, you know what? Let me just put all my savings in it. I'll ask us what he could have done. So I wouldn't want to be the only one talking. We have a couple of people here that can tell us what he could have done. So is there anyone that wants to tell us what he did wrong or what he could have done better in that situation? If it were you, if you were in that situation, what would you have done? Yeah, Dr. Ejimoke.
I think for me, with anything, even when I'm shopping online or I want to buy anything, I always sleep over it. That's my own first route out of any bad investment. I'll go home and sleep over it. If I still feel the same way the next morning, that would be the first thing I would have done. Yeah.
Thank you very much. Yes, that is like I said, that's a good one because any don't especially when it comes to investment, no matter how good it looks like, this is an opportunity I can't miss. Trust me, the opportunity that you take that will take you to the next level, you won't miss it. So try as much as possible to think about it. To no, don't act under pressure when it comes to investment. Yeah, bold. Bold, please. You can talk now. Okay, Ugo. Ugo do. Ugo do. Ugo, yeah.
Yeah, good evening, everybody.
Good evening.
Okay, so for me, it still boils down to what you were saying. Anything that is done in a haste is wrong. So personally, I don't once something is like haste, like should be done in a haste. I feel like I don't feel good about it. And even though he should have called someone, I mean, even while he was there, he should have probably just called someone and be like, see this thing, sought a second opinion. And if this seeking a second opinion is something he could have done via over the phone, not even necessarily a professional per se, but just someone, anyone, he could just call someone and be like, see what's going on. Or do you think it's a good idea or not? And I think that may have saved him a lot. Yeah, so that's the two things I would have done. I wouldn't have acted upon it because it was something to be done in a haste. And then secondly, even if I felt that this is very good and real, but because of it's something that is being hastened up, I would just put a call across to someone to just check in.
That's a good one. Yeah, 100%. Is Bold still here?
Yeah, I'm here, sir.
All right, you can go on. What's your
Yeah.
name? Sorry, I keep calling you Bold.
Uh,
Is it
the
Bold?
thing is, I don't know what happened to my other Gmail account, so I can't access it through.
Okay.
So that's why I have to use this.
Okay, but what's your name now? What's your name?
Abdulwahid.
Oh, okay. All right, go on.
All right, sir. I think for me, every investment is a risk, and if you are taking a risk, you going in with your the whole saving you have is a very bad one. I think if you are trying to invest in anything, you should have invest what you yourself you think. Okay, if I should lose this money, at least it's okay for me. So that's what I think.
100%. Well done. Yes, that's very true. So, like I said, you are very right. Before you go into any sort of investment that look, even though it looks so real, like the client I told you about that I wanted to invest in um, a business, a friend's business. He was very keen to invest in it. And I told him, you know what, invest a small, I know he's asking for 2 million, right? Invest a small portion, maybe 250,000. Say that's the only money you have at the moment, right? And test the liquidity. Like, okay, after the first year, he said you can withdraw your money, right? So withdraw the 250,000. If the withdrawal process is swift and easy, then it has passed that test, right? Try again with just go slowly rather than putting everything at once, right? So that you can manage your risk. So that's why, and I agree with Abdul Wahid with that one. You should never put all your savings in an investment. You need to ensure that you diversify. Put this year, put this year, put this year. Don't put all your savings, and you need to also keep some savings for rainy days. The reason why he said why Chinko Ekun, the artist, said that affected his career was because even in that savings, he had money that he was supposed to invest in his music career. This music career is very expensive. You need to pay for studio sessions, you need to pay for adverts, marketing, and all that. So he put all that money, he puts it in the investment, which now made it really difficult for him to progress in his music career. So what you need to do is you need to separate six more. We always talk about this, and people don't. We don't talk about it enough. Emergency funds are very important. You need to have 6 or 12 months emergency fund, and if you are a self-employed person, you need to be having a lot of money in your savings before you go on to invest, right? Because that investment, you don't want to touch it unless you are, it meets a goal. So maybe the investment has reached like the 5 year investment period you wanted to invest it for, then you can take it out, right? Rather than taking it out because you need money. At that point, you might take it out when the market is down or when the investment is not, or there are penalties for these things like fixed income asset. If, for instance, like the Sharia compliance one we said for 7 years, if you take it out early, you get fined. Like you pay fees for taking it out a lot earlier. So you don't want all that. You want to make sure that your investment money is your investment money. You have money for your operations and for emergency cases. Dr. Ejimoke.
Me, I just wanted to say this. So, my own belief about investment is only a scammer that falls for a scam investment. That's my understanding, because it's, if not that you are a scammer, why are you looking to take advantage, a big chunk of advantage of something? At least they say that you test the waters first, put some of part of you. So it's my thought that there's only a scam that falls for a scam. That's just what I wanted to say. So if I'm talking based on the example that you gave with regards to the actor.
Yeah,
So personally, I feel that he need to have some scamminess inside his mind. That's why he fell for that scam as well.
100%. Yeah, and you are very right. And I think another thing that affects people, especially with investment, is they tend to follow the crowd. Wait, everybody is getting money from this. I remember CBEX. They wanted to kill us on the TikTok. Yeah, I didn't even know what it was until a friend brought it to me to ask for my advice about it. And immediately I just searched for CBEX on TikTok. I just saw everybody. TikTok, CBEX just paid me this. Yeah, they just CBEX and which other ones? CBEX and PBEX, I don't know. But the CBEX was the one that everybody was very familiar with. So people tend to get carried away with the emotions, the emotional part of it. So they like follow the crowd and say, okay, I have like 5 friends that have gotten money from this. So what could possibly go wrong? So that again is something that we just need to be aware of, that yes, everybody is getting money from it. It might get to your turn and you'll be the one to lose, right? So you don't want to be in that situation at all. Any investment, every investment has a risk, right? But you want to make sure that you've done your due diligence, you educated yourself about that investment, and it aligns with your own personal interest. Okay, before you can say, okay, let me go into it. Before we start hearing stories that touch. Okay, so another red flag is unsolicited offers. I get that a lot via emails or some just random people calling me, or even social media to say invest now, or they say invest in gold or something. You've not asked for their offer or their investment advice. They just give you unnecessary investment advice. And the scams that people fall for, the African prince that wants to share his wealth with people. A friend of mine, while I was working, uh she's British. She just showed me that this thing, that she showed me that email that this African man is stuck somewhere in Europe, and he just needs this African man is stuck somewhere in Europe and he just needs money from me. Once he gets that money, he said he's going to give me 250,000 pounds that for helping him once he gets back to Nigeria. I'm really thinking of sending it to him because he really needs this help. I said, "Are you sure you are sending it to him because he needs help, or you're just greedy and you just want 250,000?" I said, "This is a scam. It's an obvious scam. Don't fall for it." So another one is when the investment is so complex to understand. you're trying to understand this thing, but it's not just working. You don't seem to understand it. You have a call and they say, you say, okay, explain this thing to me, explain this investment to me, but it's just they still explain and you don't understand it. It just means that any investment that is too complex to understand, it means that it's not your type of investment. So it's better to just stay away from it. Right. So those are the red flags you need to watch out for. And these are just key things that you need to remember. The first one is that if it's too good to be true, I think it's too, let me do it like this. Yeah. If it's too good to be true, and it probably is, just ensure that you do your due diligence and make sure that it is if they are offering way too high, yeah, they're offering you way too high in such a short period. It just means that they're just looking for greedy people, right? You want an investment that, okay, when you compare it with other types of investment in similar classes, you want to know that, okay, it's so tight, it's so close to it. So maybe, for instance, you have an opportunity and it's saying, okay, 20% annual return. You know that, okay, 20% annual return seems to, in this area, maybe it's fixed income or something. Maybe it's so close to the benchmark. So within the asset class, you know that it's so close to it. Oh, sorry, 1 second. I think Ugo is saying she went out. Can everybody still hear me? I think Ugo is the one that has network issues.
Yeah, I can hear you, sir.
Okay, good. All right. So another one is, like we discussed before, do not follow the crowd. Everyone have different profiles. Just make sure that you do your own thing, do your own assessments, and from that your own assessments, you choose your own investment opportunity. Right? Not every investment opportunity is for you. I know a lot of friends, they bring investment opportunities and say, let's do this together, but you can't say yes to all of investment opportunities. That's why you need to make sure that you do the ones that really align with your own personal interests. Also, try as much as possible to educate yourself on the investment. But if you do not understand or you don't have time to research it, just leave it, because it's better to leave it than to invest in something that you have no clue about. If you don't want to, like for instance, if you don't want to educate yourself on cryptocurrency, just leave it. This is not for you. Don't just say, people are investing in Bitcoin, or see how much Bitcoin is now worth today. Let me just put money in it. If you don't have a financial advisor that looks into that kind of investment for you, just leave it. Yeah, unless you want to go into research about it, educate yourself on it, and get an understanding of how it works. If not, just leave it. It's not for you. Also diversify as much as possible. Like we said before, don't put all your eggs in one basket. Like the artist Chinko Ekun guy that we discussed. Try as much as possible not to put your eggs in one basket. And the most important part is to reach out to DFAB if you want to just have a conversation about your investment journey, or you want to just start your investment journey. Right. Let me just see. And that's it. That's it. Do we have any questions? If you don't have any questions, I have questions for you. I have scenarios that I want us to. I think it will be fun. I have some scenarios. Okay, if there are no questions, the first question is the financial one too. So I have this client. She called me and said, "You know what? I'm earning a lot of money. In fact, I'm earning she's a surgeon. I'm earning £150,000, and the issue I'm having at the moment is that I have a husband that is an actor. He gets money once in a while, but he doesn't want to do any extra work, right? And so it means that he relies a lot on her. And now he's brought an investment opportunity to her that okay, he wants to invest in something since she's been shouting that okay, she's been shouting that go to work, try to get something to do. Now he wants to start a business and she wants to invest. She is asking for her to invest in it. What, as the lady, what do you do? What are the things you need to do? Do you just say, it's my husband, what do you need? Let me just put the money in there so that at least you know that okay, he's working now. He has, aside from his actor job that sometimes they call him, sometimes they don't even call him. Now he has, like, you've invested in him, he has a business that he's running. Or what do you think you do in this situation? Who wants to go? Well, the ladies in the house. So we have Dr. Ejumoke, we have Opeyemi. So, Dr. Ejumoke, what do you do?
My husband is my husband, though. My money is for my husband. I don't. If my husband says I should,
Everywhere.
so if my husband, why he doesn't? I don't even. He doesn't need permission from me. Once I get my salary, he will tell me what we are using the money for. So we will not even be having that conversation in the first instance.
That's a good one.
Thank
That's
you.
that's a very good one. The way I agree with this. So just ignore everything and just say, you know what, just take the money. You have access to my account already, sir. So just take the money and spend it as you wish. Is that Opeyemi, is that your own thoughts too? Where is Opeyemi? Opeyemi is not here. Is there anybody that has anything to it? Oh,
Yes, I don't have anything to add. That's all.
so you also agree to it? You agree that your money is your husband's money, Abby? That's good though.
Oh my God.
That is good.
It is not so.
Yeah, I think there
I
should
don't
be.
know. It is
Sorry,
not.
Abdul, you were going to.
My money is my money. His money is my
There
money.
should be a discussion about.
Wow, your money. see another angle. His own money is our money, but your own money is your own money. Okay. So in that situation, based on this your own thoughts, you would say, okay, no, my own money is my money, so I can't invest in your own business. But when you bring money, wherever you get
Um,
it from, it will be our own money.
the thing is, I think that there should be a separate and a combined. For the separate should be for like personal, and then there can be another account for like a combined activity or investment.
Okay, that's a good one too. Okay, that's good. Abdul, do you want to say something?
Yeah, I think there should be a discussion about the investments before you go ahead and put your money in it.
Okay.
I think there should be a discussion about the investments before money in
What
it.
kind of discussion?
Like try to make a research. Sorry, where is this investment coming from? What are the key factor of this investment? Something like that.
Okay. Yep, that's a good one. Yes. So aside from Dr. Rejumoke that said she'll just send the money to him. I think the right thing to do is definitely to ensure that you go through the right process. So every time I talk to any of my clients, I say you have to distinguish if this is a gift or an investment. A gift, I have no problem with it as long as we check your finances and it's you are okay to give to give that kind of gift, right? It's not affecting your emergency fund, it's not affecting you that much, right? It's not affecting your own personal financial goals. So you're okay to give anybody a gift. But if you take it as an investment, then that's a separate conversation, right? If you say, okay, your husband is saying, let me invest, help me invest in this, not give me, help me invest in this, then you know that I have to go through the right scrutiny, right? I have to scrutinize it. First of all, I have to check how much investment are you asking for. I have to check legality. I have to check if it's not a scam, you know. I also have to check valuation, like Okoyemi said. You check the valuation of the company. Maybe you're investing in a company. You check if the P ratio is high. The price to sales. You've checked everything. You see that okay, the valuation looks right for that amount. You've checked the benchmarks with regards to the market, the industry. You want to make sure that it's not just because someone is saying invest in it, so your husband has brought the investment idea to you as well. No, you've also analyzed it that okay, let's do the discounted cash flow to see the value of this.
Dr. Yusuf, you are dragging things to a long level. All these ones are things that would happen after. What I said earlier, I was just joking. All these things that you're saying are things that would happen after you first of all analyze the history of your husband's money management. So
Mm.
the first thing, because anybody can write a very good proposal, which is actually when you give it out, they vet it, is all good. But you give the person the money and then they use it for something else.
That's another angle.
Exactly. So the first thing is how before now, what is it business oriented? Is it somebody that lavishes money, that spends money anyhow? So you need to evaluate those kind of a thing. I'm going to give an example of my dad is somebody that's very, very good with business, but one of the things that is bad at is investing. He has tried several business and investing in several people's businesses, and for some reason it just never works out. So if somebody like him comes to me that, oh, I'm thinking of starting a new business, I want you to invest, now I'm going to look at his history in regards to him investing, and I've seen that he doesn't have a very good history at it. I'd rather boycott him and go straight to the source, because it's not because, and that's why we need to understand the difference between you are my husband and we investing. So, like you said, gift is different from when we're actually running a business. So I would rather say, okay, you know what? We know that you're not good with finances, we know you're not good with business. Let me speak directly to those that are, involved with this. So I think the most important thing is understanding your partner, understanding their weaknesses. How are they with finances before you even go to the long story? And it's okay if they are not good with finances. It's okay if it's a legitimate business, then you can explain to them, and then you directly speak to those that are involved with the business.
Hmm. That's a very good one. That's a very good one because you need to, like you said, you need to ensure that the right person is actually running the business, right? So um if it's not a gift and it's an investment, then you need to go through that. And sometimes you need to tell your partner the bitter truth. Like, nah, I don't think this business works for you, right? Maybe it's even something that they are not quite, that this person is not quite passionate about laundry, for instance, laundry, and they want to start a laundry business. You don't even wash your clothes. So how can you start a laundry business? You're not passionate about this thing. But then if it's something that that, oh, this person has been talking about this thing for a while, I think he's quite passionate about it, then and he doesn't have a bad track record with regards to investment like Dr. Jumoke said, then you have to now go through all these basic things. So yeah, well answered.
Or else your husband will just use your money to carry woman.
Uh, well answered. Okay, another scenario. Are you guys ready? So
Yes,
this
sir.
this one is funny, and this is not my own client. It's just another person telling me about this client that okay, and I think we've seen it in movies, but you guys will think it's in movies. This guy said he just realized that his grandparents left a huge sum for him, I think like £1 million, but he doesn't know if he should tell his wife. And the reason why is because his wife is more of a spender. He feels like he's kind of like a minimalist. He spends, but he doesn't spend too much. Like he doesn't like fancy things. He's just a neutral guy. But his wife has a tendency to go in to buy Gucci and stuff like that. And it feels like if the wife knows about the 1 million, he thinks that the wife is going to it might affect the relationship because it feels like the wife will expect more and she'll want to upgrade the lifestyle a lot higher than he wants. So what do you think in this aspect? What do you think as the husband? What do you think you should do? So if he doesn't tell her, is deceptive. So it means that you are lying to someone that you've married. You are lying to her, and if he tells her, it might affect their relationship and the money might be gone within a year. So what do you do, Dr. Ejumoke?
What you have said, I have practical experience of what you have said.
Mm-hmm.
My partner knows me to be a free giver. So me, I don't spend money on Gucci. But one thing about me is that once I have money, I'm thinking of the next person that needs help in my life, or the next person that needs a favor. So I'm scrolling through my list of people that have asked me for money in the past 1 month, and I'm thinking of, okay, how can I help them? So because he knows the kind of person I am, I remember then when we want to contribute money together, he would have it in his account. And I think that it's a conversation that they need to first of all have. Before talking about the money the guy has, they need to first of all talk about the weaknesses that each of them have. And I understand that my weakness, because we had a sit down to talk about it, that it's not like you spend money lavishly, but you don't know how to say no to people. And that was this Philomena just said she needs help. So he was telling me, said, you don't know how to say no to people. And if you keep saying yes to people, we're going to go broke very, very soon. So, and it took a lot for him to step up and tell me that. So after you told me that, at first when he said so, I was, strong-headed. I was like, no, but then after he left at night, I reevaluated what he had said and I understood that I think is right. This is me. So I think that should be the first stage of the conversation that they should have, making the lady understand that, see, you spend a lot on things. I'm not saying those things they are not bad. I'm not saying they are bad. We just need to also think of how we invest as well. So let them have a conversation around that. Let her admit and be aware of her weakness, right? So once she's aware of her weakness, then he can talk about the money. It is never, if she's not admitting the weakness, then there's no point talking about it, because the money is going to go. The money is going to go. And it's okay for you to justify it, that you were not listening when I was talking to you about your weakness. So I wasn't able to open up on bigger things to you. It's fine to talk about it like that. Yeah.
That's a really good one. Yeah. Well, yeah. Philomena.
Okay, good evening, everyone. So,
Mm,
I was just thinking, if the wife is like a spender, and the man knows that if he tells her, she's going to lavish the whole money, and he still needs to tell her. So I feel he can just say, okay, I have this inheritance from my father or my grandpa, but he shouldn't let her know the exact amount. He should just say
mm,
that he has the inheritance, but she didn't mention the exact amount. And then he can just like give her an amount, oh, it's from so place, so that she will feel that okay, she has gotten her own share or something. Then he can now think of what to do with the balance. Maybe invest it, start a business or something. So that's my only two thoughts, sir.
What if she finds out at the end, maybe later in life, that it was it
See,
was
this is not
different?
even a good bedrock for marriage. I think they still need to talk about the main issue and address it, or else it's still going to be an issue in their marriage.
Mm,
Address the main issue. How long do you want to continue funding our lifestyle? How long?
okay, this is this is good. This is a good conversation because there's actually a real life story of both ways. The first one, the real is real life story. First one is that a guy also, he was called that you one of your distant uncles, they left a huge amount for you. So he had that conversation immediately with his wife, but he told his wife, see, I'm not going to let you spend this money. We want to keep this money for the future. We want to make sure that our kids are okay, this and that. Before I even took the money, they had that conversation. And the wife was like, nah, what do you mean? I have this amount of credit cards. We've not even lived our life at all. Why would you say future? Future, what if we don't live to the future? Like, no, I don't agree. They had a serious argument about this. And guess what happened? And I kid you not, this woman, I'm sure Dr. Ichoboke, maybe you've seen it in one of these guys. What's this guy's name? One of his videos. And the wife arranged to kill that man. She actually killed the man. She gave him poison because of this money. This money that he has not even collected though. But what she did was, when he was traveling to collect that money. They said, okay, come here, you just need to sign a couple of papers and get the money. She put a poison that morning in his tea, that hoping that when he gets back, the poison is very slow to react. So when he gets back, once he gets that money, he's going to die. Right. But unfortunately, the flight was delayed, so he spent hours at the airport. He died at the airport. And eventually, they even realized that it was a scam.
There was no money.
There was no money. So that conversation that Dr. Ejuboga said they should have, if it doesn't go well, it might affect the relationship. Also, the one that Philomena said that you should deceive the wife, it is also a difficult one because at some point she might realize, and it might also affect the relationship. So it looks like it's a bit of, okay, do I choose my family or should I choose this money scenario, right? So it's deceive. So both ways, it could lead really bad in both ways. And what I always say is that, why are you even in a relationship with someone you don't trust with your money? So a relationship, a marriage is something that you guys both have to come together. You guys should have been working on your finances for a long time, right? You guys should have, doing things together for a long time. So if at the early stages you see that, okay, this person, I think our financial attitude or financial mindset is not aligned, I mean, it's something you have to now question and say, do I still want to be in this relationship? So it shouldn't get to the point where you're having this kind of issues with finances because you're already marrying someone that you feel like you have aligned financial mindsets with. But if not, you guys have been working together on it. So when this comes, it's just like, okay, now this is in. Remember what we've been working on. This is how we should do it. And at that point, both of you should be on the same level with regards to how you want to go about the money. So yeah, yes, everyone is right in this situation. So that's it. That was a good conversation. That was a good conversation. All right. So don't let me keep you. I know we are enjoying
And
the.
I also just say this as well. I think it all leads back to people marrying people that have the same mindset, the same financial understanding as they have. These are conversations that should have been had at the beginning. You're seeing a girlfriend that is coming to greet you carrying a Gucci purse and they using a Versace perfume, and you are saying you smell nice, you smell nice. Your pocket will smell nice as well. So those are the conversations that should have been asked before you guys even, end up getting married at the beginning. These are not traits that show up within the marriage. They are things that you must have seen, but you are, blinded by what you are getting at the time. So
100%.
yeah.
I watch a show which is called Love is Blind, and they were so in love, they were so in sync with every other thing aside from when they got into the conversation about finances. The girl
Mm-hmm.
was saying she has credit cards, she has some loans she needs to pay, no savings, no nothing. And the guy was at the point in his life where he already had his financial life together. So it was like, well, I mean, I love you so much, but that is a deal breaker for me because we are not aligned at this point. I know you have some issues, but it's just what she has just said about her finances. It just made him feel like, well, this is going to affect my own finances as well. So it's not something that we can go on further with. But at that point, some people will still say, nah, that's fine, that's okay. But that brings more problems in the
Yeah. Yeah.
so at that point, it was just like, nah, we can't do this anymore.
Yeah.
Which is okay, right? But people do not take
They
financial
don't. They
conversations,
don't. They
and it's very
don't.
important in marriages.
Yeah. When I was dating my husband too, he thought, oh, you are nice, you are so nice. He didn't know that the nice was going to choke him when we go marry. You should have seen the he, he just thought that I was a nice person. Oh, you are so nice, you are so nice. You don't even take money serious. You just give out the now that you got married to the person and they're dashing out your money now is now a problem. Yeah. So people don't see those issues and they don't address those issues at the beginning. So
100%. Yeah. All right, Philomena, before we go.
Okay, so I have a question. So,
Yeah.
talking about finance, partners, and all that, what do you think of someone that says, "Okay, your money is your money. I don't need your money. Keep your money. Can use it and do whatever you want." Then his money is not like for every other thing. Do you think like at the end of the day, there's going to be like an issue from that, or should you just accept it, or what should you do in that situation? What should the conversation be about? And as the person have said that,
Yeah. So that's a good one. So we still see a lot of guys that say, whatever my wife makes, that's her own concern. But I'll make sure I take care of everything else. But I just believe it's not something that a conversation that the kind of conversation you should have with that kind of person that no, you also want to be involved in everything, right? Because at the point where you agree to this, you also agree to the fact that he can use his money to do anything he wants because he has given you that permission to do yours the way you want to. So when he buys something that you don't kind of agree with, or it's not what the family needs, it feels like, okay, well, I told you already that you can use yours to do whatever you want. But I believe a family unit is the it's being just two people uniting, coming together. So I believe even if it's going to be a small percentage, you need to have that conversation. And no, 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 you can't just say my money. No, no, I need to also be involved in it. Give me a percentage. Let's discuss the percentage that I'll put in it, so that we can have the same goals, financial goals as a family, and we can both work towards it. Stats shows that about more than 70% of the people that of the couples that work together towards a financial goal, they achieve it. They attain that financial goal. Talk less of the people that are in the marriage, but they are doing things separately. So it just means that you will have your own personal goals. He will have his own personal goals, and that way you guys won't reach those financial goals as early as possible. So it's best you guys work together, have that conversation so that you guys can get to where you're going quickly, more quickly. Yeah. All right. So I know we digressed a bit from investment opportunities, but it was a good conversation. I enjoyed the conversation, and yeah, well done to you guys for sticking around. Hopefully, we'll have another one, which would be based on personal finance and relationships, so that we can have a lot of scenarios. I'll bring like 100 scenarios on that day, so we'll just be talking about scenarios. I'll make sure we have that very soon. Don't worry. I see you guys like all these stories and scenarios. All right. So that's it for today. Thank you very much for joining, and I'll see you again some other time. Okay.
All right,
Uh,
sir. Thank you very
thi-
much.
you're welcome. This session is recorded. I'll share the recordings as well. All right. Thank you guys, and see you soon.
Thank you,
Enjoy,
sir.
enjoy your weekend.
So the weekend is over.
Below money.
You
You still
still have
have
tomorrow.
Sunday
You
now.
have Sunday. Thank
Abina.
you very
No,
much, sir.
be
Thank
like
you,
after
Miss June.
Saturday, Monday
Mrs.
has already
Junie. All
come.
right.
Sometimes
Bye-bye.
It's true, Sha. After Saturday,
Thank
like
you, Opeyemi.
Monday.
Monday come.
All right. Okay.
Good night.